Hi guys, very good morning and welcome to Trading Hour. I'm Pavitra Parekh. With me is Surbhi. Surbhi, for the markets, it is not looking like that good a day. I mean, we are seeing an 85-point cut right now, but right now the top story is definitely what's happening with Adani. The Supreme Court judgment that just came out. We were talking about that and we'll get you some more reactions on that as well. But for now, a lot of the Adani Group companies have slipped significantly from the day's highs. I mean, still holding up. It's not too bad at all. But whether you take a look at Adani Enterprises, Adani Ports, these ones have seen a significant slip from the top of the trading session. Other than that, for the market, like I was pointing out, it's a 0.5% cut. What's encouraging is that the mid-cap index, the small-cap index is holding on pretty well. So very flat for both of these, but holding up well over there. The Nifty Bank also not too bad today. It's just around a 0.2% cut. But Surbhi, like I was mentioning, the top story perhaps once again is Adani.
Well, I guess you could toss a coin between the US 10-year yield and the Adani story, Pavitra, but I guess right now I think the headlines...
We've got it covered between us then.
The headlines are sort of pretty loud and clear from the Supreme Court. Yeah. We're sure you caught all the action. But perhaps the Adani group of stocks reacting to the news that's come in. To put it in a nutshell, the Supreme Court has directed SEBI, the market regulator, to go out and conduct a probe. It has given SEBI 2 months' time. And basically, it has said that SEBI needs to investigate whether there has been any violation of securities law, specifically mentioning the possibility of non-disclosure of any related party transactions. And remember, if you go back to the Hindenburg report, this was one of the major allegations that was raised in that report. SEBI then comes out with its findings and submits it to a special panel that has been appointed. And this is a panel that consists of some of the most accomplished luminaries of the financial and corporate world. And then, of course, the matter will progress. Right now, there's still some green on a couple of those Adani stocks. But otherwise, Pavitra, for the market, just want to mention out here that we are actually at very critical levels. We shouldn't lose sight of that. Right now, this market is trading at budget day lows. The little pop and the excitement that we had yesterday, that kind of fizzled out, and that's largely because of what was happening in the US bond market. Pull up the US 10-year yield. The biggest headline overnight was that we hit that 4% mark on the US 10-year. And because of that, sentiment is extremely cautious. It's kind of soured, and we haven't seen a follow-through. This is the budget day low. This is where we are at. The other important level, of course, to keep in mind is going to be the February low, which is about 100 points below where we are trading presently, 17,255. So psychologically, these are some of the levels that the bulls are going to track extremely closely and hope that there is no breach below them. I guess, Pavitra, the one good thing that's working for the market today is the fact that it's not a very wide sell-off. The broader market, the mid-cap index is still holding up, so the selling is more concentrated on the large-cap side of the screen. Yeah. But as I said, I think these levels are extremely critical, and we need to see if they hold.
Oh, absolutely, we will. And, speaking of some of the stocks which are holding, take a look at the real estate index, for example, or, the PSU banks. These are indices which have seen sharp cuts in the previous few weeks. But for this week, if you look at it, the real estate index is up over 5%. The PSU bank index is up almost 5%. So it's looking quite good over there. In fact, if maybe we can pull a few of those stocks up for you, take a look at, say, macro tech developers. You have Suntech. These are just some of the stocks which are holding up very well in today's trading session. On the downside, there is some, pressure that is being seen, perhaps largest in the IT space today. So some of those names will be up for you as well. But that's what's happening in terms of the market action. We're going to keep coming back to this, of course. But first up, let's get a conversation going on the show now. Forgings is the first corporate on our radar. Vidya Shankar Krishnan joins us now, Vice Chairman and Managing Director of Forgings, to take some questions on their Q3 performance as well as their order book going forward. Mr. Vidya Shankar, thanks a lot for joining us. This is Pavitra. It's been a very good showing for your company for 9 months. I think you're already clocking in over 1,000 crores of revenue. I think earlier you had guided for around 1,300 crores. Can you tell us where that stands? Would you look to revise your, guidance, considering that you've already clocked in such a solid performance?
Considering the performance of the last few quarters, I think we would be headed to about 1,400 and a little bit above that for this year. The CV market has been pretty buoyant and backed by decent performance from our end, because we could be doing a lot better than this. And so we'll be looking at something closing this year at around 1,400 plus.
Okay, got that, Mr. Vidya Shankar. Just stay on for a second. We're getting a lot of important news from the Supreme Court today. And the flashes on your screen are, of course, the next big piece of information that we've got. The Supreme Court has basically done away with the present system of the appointment of the Chief Election Commissioner. The new system is going to be an appointment done by the committee, which includes the Prime Minister, it includes the Leader of Opposition and the Chief Justice of India. So this is also a big development that's coming in on, of course, the petition that was before the Apex Court. So the way the CEC will be appointed will be through this 3-member committee, the Prime Minister, the Leader of Opposition and the Chief Justice of India. So very important developments coming in from the court there as well. We'll keep getting you more details and some more color on this judgment and some more details that are coming through. In fact, I think we have some more commentary that's coming out. Let me just take a look at what some of the latest developments are. So the Supreme Court's 5-judge Constitution bench has unanimously ruled this. The decision that's flashing in front of you on the screen. The Supreme Court is saying there's a need to insulate functioning of the Election Commission from executive interference. These are very important statements coming out from the Apex Court. The election commissioners need the same protection as the CEC, the Chief Election Commissioner, and can't be removed by the government. The court goes on to say that founding fathers of the Constitution left it for the Parliament to frame law for appointment of CECs. Political dispensations betrayed trust reposted in them. The law is yet to be framed. So this is some very important commentary and observations that are coming in from the Supreme Court as it has set in motion a new manner in which or by which the Chief Election Commissioner is going to be appointed, 3-member committee, Prime Minister, Leader of Opposition and the Chief Justice of India. So, Pavitra, I think the Supreme Court has really had a very busy morning today. And, this is obviously a landmark move as well.
Oh, absolutely. Very big move coming through once again, from the Supreme Court. So those are the flashes on your screen. We'll, talk more about this and keep bringing you up to speed with everything that we do get coming out of the Supreme Court. Just to run you through it again, in case, you missed out on any of those comments, the 5-judge Constitution of the Supreme Court has directed for an independent panel consisting of the PM, the LOP, the CJI to appoint election commissioners. So this is what we were, bringing you up to speed with. The 5-judge Constitution of the Supreme Court bench will decide on the plea-seeking independent panel for the appointment of election commissioners. So all of these flashes are up on your screen. We will keep talking more about this. But for now, let's go back to our discussion that we were having with a corporate on this show, Forgings. And so, if I can come back, you've taken us through your revenue. You did say that you're revising the guidance upwards to maybe 1,400 crores. This is for all of FY23. I do want to ask you on the margins because, we have been talking about the metal prices as well. Considering that there has been a fall and you've already seen an improvement, what can we expect in terms of the margins? Because in Q3, we already saw an expansion to 20.6%. What can we expect going forward?
I would say margins will be reasonably in place. I see metal prices going back, climbing back due to price of coal. Already steel prices have gone up in the last few couple of weeks at least. And so metal prices will be, but as far as we are concerned, metal prices are a pass-through. So customers will get the benefit when prices drop and they bear the increase when the metal prices go up. So as far as MMF is concerned, it would be largely revenue neutral. There could be some little bit of timing differences that we have seen over the last few years. That kind of averages itself out.
Okay, so Mr. Krishnan, you've detailed out your revenue targets as you're looking at the next couple of quarters. Give us some more qualitative, color on this as well in terms of where you are seeing growth coming in from. Which are those clients where things are really revved up? Which markets are doing the best for you, performing the best for you?
Yeah. Surabhi, the color of Forging has changed in the last few quarters. From being a forging company which did some machining, today a significant portion of our revenue comes from machining. Over 55% of our sales is machine products now. And we see this ratio going very clearly to 65 and 70%, maybe more. So we've made a kind of a leap in transition from being a forge shop to being a supplier of components globally. And so that's one clear trend over the last few quarters. The other thing that we have seen is our exports were normally hovering around 60% of overall sales, 60-65%. today the situation is totally overturned, and domestic sales constitutes 65% of all our product sales, which is a huge change. So both these are significant trends as far as Forgings is concerned. Not that export sales, we've slackened off on that. Yes, markets have dropped compared to last year due to the geopolitical situation in Ukraine. But by and large, if you see, our domestic sales have gone significantly up. And we expect that trend to continue in the months and next couple of years to come. As our export initiatives globally start to bear fruit, once again, exports will pick up as well.
Mr. Krishnan, how much of your exports are from Europe? Because I do know last time we were talking about, Europe being much softer. So how much of this is just Europe related?
Overall revenues, if you see, Pavitra, we are at about 15% US, 15% Europe, and about 7-8% South America.
Okay.
So,
okay,
Europe,
just
a significant number. And at the same time, numbers that we could, push up over time. So there's a lot of avenue for growth.
Okay, just a very quick final word on cash utilizations as well. I believe your debt is going to be close to 550 crores at the end of FY23. As we're looking at the start of the new fiscal, what's the comfortable debt equity level that you will target? And also maybe a word on CapEx that you have in mind for next year?
Yeah, we have targeted 500 crores starting from the beginning of this fiscal. So, and we are about 200 crores into it. Balance 300 is to be spent over the next, I would say, 5 to 6 quarters. So 1 quarter of this year and 4 more of next year, FY24, and maybe a little bit into FY25. So this should take us comfortably. We're looking at turnover in the region of about 2,400 odd crores. So that's one. And as far as debt equity is concerned, we are pretty comfortable. Net debt to equity right now is rather low at about 0.4. So debt levels are pretty comfortable. And as we march into the next year, we could see us taking on a little bit more of debt. Of course, we are also paring debt even as we speak. Every year, our repayment is around 90 to 100 crores. We may possibly stabilize at these levels of long-term debt.
All right, you could stabilize at these levels for long-term debt. Mr. Krishnan, we'll leave it at that today, but thank you very much, as always, for stopping by and speaking with us on the outlook for the company. That is the management of Forgings. The stock is a little bit under pressure today, and, for the past year as well, it has been pretty range-bound, just around 5% higher. But that's the conversation that we were having. We do need to get into a short break now. On the other side, we will talk you through what's going on with the weather conditions. We're gearing up for a scorching summer. The IMD has been warning about this, so Manisha will get us the latest.
Welcome back here with us on Trading Hour. It is time to talk commodities, and it's the rising mercury that is dominating headlines in the commodity universe of late. Let's go across to Manisha for the latest. Manisha, either it's China or it's this rising mercury. So you tell us what's the latest on the temperature.
Well, I can say this much, that the heat is definitely on right now, whether it's on asset classes, commodities, or the weather on that side. And we have seen Feb come out as the hottest since 1901. It was warmest February in Delhi after 122 years there. And currently as well, when you look at the weather temperatures, we are 3 to 11 degrees above normal for various states. And that's exactly the kind of advisory the IMD and SkyMet are putting out as well. So March and April, we are looking at higher temperatures here. For Northwest as well, it was the hottest in 122 years, as we have seen, and there are concerns coming in from labor, construction, all of those sectors as well. So Feb also has recorded 68% of a rainfall deficit, and anti-cyclone over Arabian Sea has been one of the reasons that you have seen the temperatures continue to increase. The markets also are looking at 2023, which is expected to mark an end of La Nina event. What does La Nina mean? Well, it means that you have the above surface temperature on the sea slightly cooler than normal. That is what gives you breeze and gets you colder temperatures. And this is an event that we have seen for last 3 years. Pardon me, but that seems to be changing now. And El Nino will mean that you have warmer temperatures, and that will see increase in temperatures coming in there. So day and night temperatures may remain above normal is the IMD forecast now coming in for the month of March. They also are anticipating scattered rainfall, and that could temperatures under control for some of those days there. IMD also goes on to say that you are going to expect 3 to 9% of temperatures on the higher side, and that they will provide color-coded heat wave warnings from 1st of March, which we have seen already start to come in there. SkyMet also has been talking the same thing, and they also have warned that it is going to be about states like Gujarat, Rajasthan and Vidarbha, which could be looking at 40 degrees in sense of temperatures in the second week of March itself. So March, April, May and June, before the monsoons really begin, it is going to be a very harsh summers, as to say. The high temperatures also are giving a lot of crop concerns right now, which may see an impact in sense of deterioration in output as well as yield there. The important crops that we're looking at right now, one is wheat, the other is mustard and chana as well. These are the standing crops, and there could be some impact of the harvest and these crops coming into the markets also. Then the anticipation also of higher consumption of electricity for air conditioning and irrigation is something that the street is as of now anticipating and putting much higher numbers for that as well. So just to explain on what heat wave really means, when you look at plains, if it is mercury above 40 degrees or 4.5 degrees above normal, it is called a heat wave. When you're talking about hill stations or mountains, mercury above 30 degrees will tell you that. And when you talk about coastal areas, anywhere temperature which exceeds 37 degrees is called a heat wave. And that's exactly what we are anticipating for the month of March.
All right, Manisha, thanks a lot for getting us all of the latest on what the summer season is likely to look like. So in addition to an early onset, you're also likely to get a severe summer this time around. In fact, we've been talking to a lot of consumer companies, and we do have a very special chat with the management of Crompton Consumer also lined up for you on the show. So stay tuned. We spoke to them about what the demand is looking like in this situation. So we will bring you that. But for now, we have to get into a short break. It is a 78-point cut on the Nifty. We'll discuss the market technicals with Vishal Malkan when we come back. Welcome back. 17,370, that's where we are at on the Nifty. So we're off the day's low, but it is still an 80-point cut that we are seeing. The mid-cap index, however, has moved into the green. And like we've been pointing out all through the morning, it is the broader markets which are holding up much better. So the mid-cap index, the small-cap index are faring a lot better than what we're seeing on the key frontline index. In fact, the Nifty Bank is also doing a little bit better. It is right now around a 0.2% cut, but holding up much better. Let's get Vishal Malkan in for a technical check on the market. Vishal, we did slip below that crucial budget day low that we've been talking about as well today. We're off those levels now at 16,370. How do you see it panning out from here? Yesterday we did get a bit of a bounce, but seems like it was restricted to perhaps a one-day move over there on the back of what we got globally as well. How do you look at today's move on just an index level?
Yeah, hi, good morning. I think Nifty and Bank Nifty both in a way are holding on to those budget days lows. In a way, Nifty has slightly broken that, but we can consider that much because those levels of 17,300 and 400 are very strong on charts on the weekly as well as the monthly as well as the retracement levels. So it won't be easy to break those, and especially other stocks like blue chip stocks are also holding on to those budget day lows. So I think it should hold on to this. It may consolidate for a few days, but it should see a nice bounce from here in the coming days.
Okay, so expecting a bounce in the market, Vishal. That's interesting. So do you have any ideas on the upside individual stocks? Any longs that you are working with?
Yeah, so the stocks which are tracking right now, one of them is IEX, which has broken out of the resistance of 145 and sustaining above that with good volumes. And daily and weekly charts have got better patterns. So I think we'll go with a buy on that with a stop of 145 right now for a target of 160 to 165 in the next few trading sessions. And the second one would be India Cement, which has also bounced back nicely in the last few days and forming bullish pattern on daily as well as weekly. So I'll go with a buy on that with a stop of 194 for targets of 220.
All right, IEX and India Cements. Vishal, thanks a lot for stopping by for that quick check on the market. We do need to get into a short break, but there's lots more coming up for you on the other side, so stay tuned.
Welcome back. We have a reaction coming in from Mr. Gautam Adani on the developments at the court today. I'm just going to read the tweet out verbatim. Mr. Adani says, the Adani Group welcomes the order of the Honorable Supreme Court. It will bring finality in a time-bound manner. Truth will prevail, unquote. Time-bound obviously is the operative word over here, because remember, what we've heard from the Supreme Court today is that SEBI has been given 2 months' time. They have to conduct a probe and submit their findings to that special panel that has been nominated, which includes the likes of Mr. Nandan Nilekani, Mr. O.P. Bhatt, Somashekar Sundaresan, and of course some judges, Justice Sapre himself. So it includes 6 members, including Justice Sapre, and the report is to be submitted to this panel in 2 months' time. And therefore, that talk about finality in a time-bound manner. Okay, with that, let's move on to some other stories as well. And this is an important one, especially when it comes to health insurance. We're learning from sources that health insurance premiums are likely to have been increased by approximately 15 to 18%. Yash is joining in with all the details. Yash, this is a pretty steep increase in at least some of the plans. What's causing it and what are insurers saying?
Well, Surabhi, that's correct. A steep increase in health insurance premiums, and almost all general insurance companies and standalone health insurance companies have made this increase. The reasons are different. For some, it's the inability to be able to increase the premiums for some years, which has caused the steep increase. For some, it is high claims which they've received post-COVID as well, because of which this increase has come about. In totality, what we're given to understand is that the general insurance industry and the standalone health insurance industry together, they've increased premiums by about 15 to 18% on the health portfolio. Of course, not the best news for policyholders, but certainly an important and a positive and a needed move for health insurance and general insurance companies. That's because health insurance portfolio itself contributes about 35 to 40% to the total premiums which these companies essentially raise. Talking about individual companies, ICICI Lombard is likely to have increased health insurance premiums by about 10 to 15%. Star Health, they've increased premiums for their plan, which is Family Health Optima, by 25%. Family Health Optima plan itself contributes about 45% to Star Health's total premium. So those are the important numbers there. New India, the PSU company, some respite for policyholders there, as the company has not taken any hike as far as the premiums for the health insurance is concerned. HDFC Ergo, another large company, they've increased their premium by about 25%. Care, Niva Bupa, Aditya Birla Health, Reliance General Health Insurance, they've likely to have increased their premiums in the range of 8 to about 20%.
All right, Yash, thanks a lot for getting us all of those details there. Like Yash was pointing out, we did speak with the management of Star Health as well, and they're saying that medical inflation as well as rising claims is what has led the company to raise their premiums by this quantity. Like Yash said, it's 25% for the Family Optima plan. But with that, we have to get into a short break in the show. When we return, we're going to bring you excerpts from our conversation with Crompton CEO Matthew Jobs. Stay tuned. Welcome back. You're still tuned into Trading Hour, and let's get you a conversation now. On the sidelines of the NASSCOM Technology and Leadership Forum, CNBC-TV18's Shilpa Ranipeta caught up with Crompton CEO Matthew Job and asked him about the company's transition to star-rated ceiling fans for greater energy efficiency, the impact of this move on their business. The Crompton CEO, in fact, also discussed margin pressures and how the summer demand is really panning out, considering that we do have an early onset. Listen in.
We still almost 2 crore fans a year, and I think almost 80% of that is ceiling fans. And from 1st of January this year, we had to completely rejig the portfolio to make sure that they meet the new B standards. So I think for almost 6 to 9 months, I think our entire R&D teams have worked hard to make sure that the entire Crompton portfolio, which is in excess of 500 SKUs, actually redesigned to meet the new norms. So, yeah, I mean, that work took, I think, quite some effort, especially in terms of deployment of the R&D resources. Now, having done that, the products have all our ceiling fans have been converted to star-rated fans starting from January this year. I think our current objective is to get these superior products to the consumers' hands as quickly as possible. And not only to get them to the consumer hand as quickly as possible, but to do so, with a minimum price increase, and also then to be able to communicate to consumers that energy efficient fans, which were traditionally much more expensive, are now within everybody's reach. So we're building also a TV campaign which will bring this idea of energy savings within your reach to our to potential consumers across the country.
Right. But did you have to take a price increase for the portfolio? How much was that? And also, if you can run me through, what are the inventory levels with trade then right now? And what about non-star rated and star rated?
So, so I would say, cost increase of 1-star rated fans versus non-star rated fans, which was being sold till the last quarter, is about 15%.
Okay.
Because the entire products have to be upgraded to meet the new requirements. Having said that, obviously it was not reasonable to try and pass 15% increase to the consumer, because I think the fans industry has already passed in the last year and a half almost 20% price increase to the market, because most companies were facing cost inflation in excess of 30%. So what we have done is we have passed roughly 5% increase to the consumers, and our objective and goal has been to continue to work, our R&D people to try and eliminate, or at least if not eliminate, minimize that cost increase that has happened. That's one. I think so. Going forward, our primary objective is, one, to make these star-rated fans available at as low a price delta as possible. Number one. Second, in terms of your question on inventory of both non-star rated fans and star rated fans, I think our objective always has been to get these superior products to the hands of the consumers as quickly as possible. So even in the October, November, December quarter, we were very careful in terms of building up stocks or in pushing extra stocks to the channel, because we believed that the faster we could get these new products to the hands of the consumers, the better it would be for everybody. So if, at least as far as Crompton fans are concerned, I think at this moment in February, or towards February end, I think the stock levels in the trade of non-star rated fans is pretty much zero or close to zero. For some of the other brands, it could be a little higher because of the fact that a lot of stocks have been pushed in the last quarter.
What's your outlook for the pumps business then? Because a lot of slowdown flagged there as well.
You're right. Pumps has been soft for a while. I think that's been caused by 2 or 3 factors. One, I think a lot of competitors who have traditionally been only playing in agricultural pumps, because of the fact that agricultural pump business itself was struggling, expanded into residential, and they came in with very low prices. And initially we decided not to respond immediately. That's one. So obviously we did start to lose some volume because of the fact that we did not want to act on prices very quickly. Now, having said that, in the last quarter, maybe towards November, December, we decided that we needed to do some pricing action. So that's been done, and we started to see some improvement already. The second, also, I think an area which is of importance for us is, again, to build some superior proposition in pumps. So we've done a lot of consumer research, and we've identified that the two critical consumer benefits are, one, how quickly do you fill the tank?
Correct.
And second is how durable are the pumps. So based on these two parameters which we've identified, we have rejigged our entire portfolio, especially in residential. So those products have started going into market in December. We have corrected the prices to make ourselves more competitive. And third, I think we have not advertised pumps in the last 15 years. So coming this season, April, June, we will also advertise pumps, because as I mentioned some time back, I think it's not only enough to have a good idea, but then you need to design products around that idea and then communicate that to the consumer. So I think that's the third part of that entire equation which we will implement, and that I think will get pumps back to double-digit growth. In the short term.
How much was this price correction that you talk about? And also in other categories also, I think you did have to, you did take some pricing action, so some correction there. Okay, if you can elaborate on that.
In pumps, I would say we have corrected or reduced prices by roughly 5%. Because we felt that the difference with competition had become unsustainable. But that's only the first part. You cannot only keep dropping prices and compete. That's why we took the second action in terms of rejigging the portfolio around relevant consumer benefits, and third, communicate. In some of the other categories, it's been more tactical. Like I mentioned, 30% cost increase on fans. We are past only 20%. Second, when this star-rated fans got launched, cost increase was 15%. We only passed 5%. And the rest we are trying to manage through one, better management on the cost side. And second is, better management of the mix. So I think that's how, because I think it's very important that we don't start to lose share.
Right.
Even if it means, for a short period of time, we have to compromise on margins a little bit.
Right.
So that's how we are trying to look at this whole business going forward.
I'll come back to the share in a little bit, but I wanted to then understand margins also,
Yeah.
right? Margins saw a sharp drop in the last quarter as well, but there has been some softening of raw material price, of commodity prices. So where's the pressure coming in from? What's the outlook like?
See, I would say last quarter, I think gross margins were structurally, they were intact.
Okay.
I think the reason why you saw the company's profitability erode a little bit was because our sales did not grow, as usual.
Okay.
Normally, we would be delivering 10 to 15% growth in a quarter. Last quarter was negative.
Okay.
And that's why you saw the margins, at an EBIT level erode. But fundamentally, the gross margins are, are where they have been for quite some time.
Okay.
So I think the challenge or the key objective in the short term is to get growth back, which is why we have taken some action tactically on some of the areas like pumps. We believe that if we are able to deliver double-digit growth, we will continue to have industry-leading profitability. But I think our focus going forward, instead of trying to maximize or keep or manage profits on a quarterly basis, is to try and ensure that the long-term growth of the company is kept intact.
Okay.
And that's how we are trying to rebalance growth and profits going forward.
And the summer demand, I wanted to understand, how do you expect, summers are supposed to be harsh.
Yeah.
There's an early onset of summers in several
Yes.
regions also.
Yes.
So what is your outlook for demand like? Do you think that the softness in the past couple of quarters can be, met or overcome this time for the air coolers business, for the fans business?
Yeah, I think, unfortunately, except that, for the last 2-3 years, I think the summer quarter has been disrupted because of COVID,
Correct.
lockdowns and so on and so forth. Less so last year, but the 2 years before that. We think that, a lot of this short-term disruption which we had because of the phase-in, phase-out of fans would be done by then. And also given the harshness of the summer, and also February has been the hottest summer on record.
Right.
So we think the April-June quarter will be reasonably strong for especially for fans, pumps and air coolers.
Okay.
So we are optimistic that things will start to look up, in spite of the fact that there is still some commodity headwind. Because in the last 2 months, I think commodities again have gone up by roughly 10%.
Okay, so that's the word coming in from Crompton. And with that, we are completely out of time on this edition of Trading Hour. Thank you very much for watching. Do stay tuned. Halftime report coming up next.